So how did they achieve all the stabilization in the context of some of the more of these broader aggregates continuing to decelerate? Well, they went to the wood and really start to get really targeted with fiscal spending. So just showing you a chart of China's budget balance, which is trending lower as of August and really in deep negative territory. So they're really stimulating the economy fiscally, and this is something they're going to have to continue to do to maintain the same growth rates. Again, I liken China to a raft that has a hole in it, that hole is getting bigger over time. So if the hole continues to get bigger, the amount of air you have to pump into the raft to keep the raft afloat and just from sinking is great. It rises over time if the hole continues to get bigger. And this is sort of how I liken the Chinese economy. In order to maintain the same growth rates, you need to maintain, if not increase, the same stimulus, because the structural headwinds to Chinese growth continue to be overbearing. China's expanded total social financing by over $2 trillion in the year to date. I mean, it's over $2 trillion US dollars. These are, I mean, I don't even know how to contextualize some of these numbers. I mean, it's outrageous. I mean, in order to grow and accelerate the growth rate, you're going to have to add more than $2 trillion next year. So you're going to add $3 trillion next year and $4. No, that's the whole point of the joke, is that we're just starting to run into the law of large numbers at an increasingly accelerated pace, and this is something policymakers are going to have to come to terms with. And when they get to their Central Economic Growth Conference at the end of the year, at the beginning of the early part of the next year, it's, do we keep doing this, or do we finally say, hey, let's take down the growth targets and really target a more reasonable and sustainable level of growth? We don't know what the answer to that is at the current juncture, but I would tend to think that just trying to comp these numbers is going to be a very difficult task, and it's going to require a lot more stimulus in 2017. So how did they accomplish all this credit extension? So again, they made policy banks lend, they being the PBOC, and on 57, they helped them. So this chart is showing you sort of the monthly net liquidity provided on an aggregate basis by the PBOC through open market operations. And what we found out is the year-to-date sum of liquidity provided to the financial sector via open market operations is up 2,022% year-to-date. That's not a typo. So in the year-to-date, they've put in 1.6 trillion yuan versus only inputting on a net basis 50 billion yuan last year on the year-to-date, throughout the year-to-date. So again, they're easing monetary policy extremely drastically. They're avoiding the major policy tools like interest rates, because I think they want to be more stealth about it in terms of salvaging growth and not sort of looking like the fools that they looked like in 2015 with the currency devaluation and the property market or the stock market collapse. But again, they're being very aggressive. But the one thing I would say in this chart, and it kind of coincides with state-owned fixed asset investment growth rolling over, infrastructure growth starting to peter out, public expenditures really slowing on a growth rate basis, is that 178 billion they've taken out in October is a big number. We're not even done with the month of October now. That could go higher or lower from here depending on what they do towards the end of the month. But again, that's a critical inflection from what had been 4 months of positively accelerating net liquidity provided into the market. And I don't think this is a coincidence. I mean, I read more than my fair share of Chinese literature on a daily basis and Chinese financial market news, and it's very clear that policymakers are quite concerned with the property market and the activity in the property market, and particularly the speculation. And we'll get into that at why and what that means for policy going forward.